The Hedgeless Horseman here. It's September 1st, 2023. This will be probably my last video for a while. I'll be off doing things for the next couple of weeks, I guess, which includes Beaver Creek and some other places I'll be visiting. So no videos for quite some time, and so I won't be able to provide much copium. I'll hopefully, pop in on Twitter, etc., and follow some news. But hey, I mean, this is what I like about my approach in investing. I mean, I know there's a lot of people who try to time and try to trade and day trade and whatever. It's like, I mean, most cases I own, I would say, they have like, I mean, I think they're cheap based on what they can become in the next 6 to 12 months. And if that goes well, if some of these, let's say, exploration companies have a success within 6 to 12 months, that might create a success that could create a scenario where they could grow for many years. It's like, any real success growth case, for example, I mean, took 3 years for Great Bear to go from discovery to being bought out. Snowline has been revaluing higher for, I don't know, a year or something. So that's kind of my point. I mean, if some of these early exploration juniors have success or more success, I mean, as long as I see growth potential, one could argue that, it's a hodl. And I know a lot of people say you should never hodl junior mining stocks, but a lot of them don't really know what they're talking about. I'm not talking about hodling, Bear Creek Mining, for example. That's, well, you can pretty much hodl some, if there was ever a time to hodl some optionality beta plays, I guess it would be now, but still, you need to, let's say, a very, very marginal deposit. Yeah, it's gonna revalue hundreds of percent when we go to the next bull leg, but that one you actually have to sell at some point because they're typically not creating much value. So, and especially if it's a really shitty project, no one's ever gonna buy that one, and nobody's gonna build that one. So in that case, it's just a matter of time until we go into the next bear market, and it goes down to almost worthless again. So that's not a hodl case, but it's like, I mean, how much trading did you really need in Snowline, for example? And I think there's a bunch of cases that have a lot of room left to grow, but that doesn't mean that they won't be retracing 50% now and then. But I don't see that as a reason not to. I mean, I don't see that as a invalidating hodling growth, for example. It just means, yeah, it's going to be a rocky ride. I mean, even Great Bear went down 30%, 40%. I think it went down 60% in the flash crash. And at the time, obviously, everybody would say, it's like, yeah, this is why you don't hodl, this is why you don't hodl. Or like when Snowline went down 50%. But it's like, they went higher sooner or later. And if you just held it for a long period of time, you would have made a lot of money. That's the thing. It's like, if a stock can grow for 3 years, if you hold it for 3 years, you will capture 3 years worth of growth. So even if there's a bunch of corrections in between, if you hold that one for 3 years and they're able to, let's say, increase the value by 500%, of course you're gonna make money, even despite the big corrections now and then. But if you try to time it, okay, I'm gonna hold a growth story with a good management team for like 2 weeks, then I'm gonna trade. You're not even playing the alpha aspect. One second, I got a message. You're not even playing the whole point of the case, I was gonna say. I mean, especially when it's a really good management team, time is your friend. The longer you hold a stock of a good management team with a project that can grow, that's how you capture that alpha. Trading stuff like that. I mean, you could trade anything. You could trade crypto, whatever. It's like, why mess up the single best thing about the case, or the few good things? 1 second. I hope that made some sense. There's like the whole point of a growth play is the fact that value will grow, and to capture the most amount of delta of that growth from today, you expect that the value add from growth is going to be higher if you hold it from today over 2 years than today over next week. How much growth? How much? How much will the value have changed over that time? Almost nothing. Maybe nothing. That's not. I don't see how that's a good strategy. So if you could, let's say, trade that, of course, but then you're not really. I don't think you're really capturing the whole essence of why that case might be good. Anyway, so there's a listener, I guess I could say, on YouTube, who made a comment. He was asking about some stocks, and he basically saying here, I hear a lot of general talk about the fact that it's cheap, that there's no guarantee, lots of general ideas on junior mining investment, but it doesn't give me the precise data I need to make up my mind on if I should buy it or not. I think he's saying I need precise facts in the resources, how easy it be to mine, how much it might cost, numbers and facts. And then he goes on, and I'd like to invest maybe in some other stocks to talk about, but I don't get enough data in the videos to make up my mind, etc. So I mean, I understand where he's coming from. He wants, solid. I don't know. I was gonna say solid numbers, like explain exactly why this is cheap. It's like, this is exactly how much this deposit is worth. The problem with that is that even the I can't do a PA on a deposit, for example. And even the ones who get a lot of money, spend a few months crunching the numbers and all of that, what the costs are, what the labor situation is a PA might be off by, I don't know, I think I read some numbers, like they're typically off at least 30%, and that might be a lot. And there's not many mines that typically live up to the spreadsheet economics. And I'm not in the business. I'm actually going to change slide here. I'm not in the business of precision. I don't like to need precision. If you need precision, that's not a no-brainer. A no-brainer is one, I think, where it's the upside is quite large, and obviously the downside is fixed at 100% all the time. I don't want to need to make. I know Monish Pabrai, who's like a student of Warren and what's his name, Munger, Warren Buffett and Munger. He has a saying that he has like 10 commandments of investing. Sure, he's invested in regular stocks, not junior mining stocks or mining stocks, or for that matter. But he has a commandment that is, thou shalt not use Excel. And of course, there's a bunch of people that, on Twitter, for example, they might have a background in mining engineering or geology. And it's like, I was going to say the whole, basher train on Eloro, for example. A lot of them, I think they know a lot about mining per se, but I don't think many of them are actually good at investing in this sector. Because in my opinion, I think they're focusing on the wrong things. It's like, why on earth would I buy Barrick Gold, for example? What's my edge there? They don't really have any growth. Same with Newmont. So should I, dig into every single one of their mines and it's like, yeah, I think I see a 20% upside here, or whatever, that the market is a bit too pessimistic. It's like that's not a no-brainer to me. First of all, I could be wrong. But typically exploration stocks, etc. I mean, I like to do it simple. It's like I recently put up a article, well, today, on Fathom Nickel. I think Fathom Nickel is a no-brainer. And like, he gets tired of me saying that I think it's cheap. The simple reason why I think it's cheap is that, like I say here, it is thankfully pretty straightforward. It's priced like there's no chance in hell that they are on to one discovery, let alone a few, let alone a district, let alone 2 districts, and yet we already know there's high-grade nickel there, large soil anomalies, numerous targets, plus a fat target that could very well be more nickel sulfides. That's at Albert Lake. So I think there certainly is a shot in hell. I like no-brainer bets. This is my case for Fathom is far away from precision. It's the same with Snowline. Why did I think Snowline was such a no-brainer? It's simply because I think they had a very good shot at least finding enough ounces that even in a remote jurisdiction like location like that, it would be meaningful. And obviously, like wrote in the piece, and theoretically the upside could be like, hey, value might not be 8 to 10 million ounces, which I thought was likely. Maybe it's up to 40 million ounces. But I don't pay for that upside. I think that it probably would at least get to 10 million ounces, and if it gets more than that, I'll just end up making more. That's not too much precision in that. It's not. I wasn't sitting there with a big fat Excel sheet and like calculating every. Well, I actually calculated what I thought some of the holes would grade, and that I guess helped a bit. But they had visuals out and all of that. We knew the footprint of the intrusion. We had soil samples, etc. But it wasn't really scientific. So it's like if you want. How much things will cost and yada yada yada. It's like, that's not my cup of tea. Because odds are I will be wrong. Well, everybody is wrong. I mean, there's literally no one that almost, gets anything exactly the same. And then, of course, it's the matter of what is it priced at? What's priced in? Even if you think it's going to be X, maybe it's almost priced like X is going to be the reality. In that case, it's not actually a no-brainer, even though it's like, yeah, okay, I see a clear-cut case that, this is worth whatever. It's like, take Magna Mining, for example. They actually have a PA, and there have been research reports suggesting that the value of Magna should be around, $600 to $800 million right now. Magna is at $98.5 million with almost, I think, still 20 million in cash. So the enterprise value is around 80 million Canadian. And like a year ago or so, maybe 1.5 now, Mitsui had an MOU with Magna when Magna only had their Shakespeare deposit, which is worse than Green Hill. And the MOU suggested implied value for the Shakespeare deposit alone, not any of the drill targets, not any of the potential outside the actual deposit, at 64 to 100 million, if I remember correctly. And now the enterprise value is around 80 million. So it's like, why do I need to know that Magna is exactly worth 700 million or 800 million or 600 million? No, but I'm just pretty sure that this price is absolutely ridiculous. And there's been instances where this sector is absolutely ridiculous. This is I-80 Gold. I just rediscovered this slide I think 2 days ago or something. I mean, if you just saw the share price, if you looked up I-80, had no idea what the news flow was, and it was trading down here, and you saw this short, and it touched the lowest level since IPO. Of course, you would assume that something absolutely terrible had happened in I-80 Gold. But if you actually saw the news releases and the SEDI filings, you probably wouldn't believe your eyes. Like, world-class hole, world-class hole, world-class, grade and width, etc. Okay, pumping out really good news. Stock still sells off. CEO buys a whopping 560,000 worth of shares, and he already owns a lot of shares. Consolidated for a bit. Was not enough. Sold off big time. Crashed. I mean, this is a crash. And then CEO buys 250,000 worth of shares more. How is that rational? How do you need precision in cases like this, for example? This was just absolutely ridiculous. I mean, it took a few months, but this stock went up 100%. I think it went up to this level the next I don't know, 6 months or something. It's just absolutely ridiculous. So again, back to these points, like, to have precision, precise facts of resources, how easy it is to mine, how much it might cost, numbers and facts. There are people that are much better at that than me. Like mining engineers, whatever. That's why I don't play that game. I don't want to outsmart the market in exactly, figuring out what a deposit is going to be worth with any, real precision. So, okay, going back to Fathom Nickel, for example. The case is that they have 2 district scale projects. They have high grade hits at both. They know there's high grade nickel at both. They have one absolutely enormous land package and another 19,000 hectare project. They're trading at 25 million Canadian, and they're expected to be drilling soon. And Quintum, for example, thinks that the Goldshagger project, that they have a discovery there already, and I know some who thinks that the Albert Lake project might be even better because there's a fat conductor anomaly here that coincides with a gravity high, which typically, it represents dense material like, heavy rocks, like metallic rich rocks, along a 3.7 long nickel in soil anomaly. So the bet is simply that there's ample evidence that both of these projects could host a nickel mine or two. This soil anomaly is larger than the Nova Bollinger soil anomaly. I think so, at least. At least the strike is a lot more strike, and the highest grade soil sample for nickel is like 50% higher or so than Nova Bollinger. Nova Bollinger was ended up being a world-class discovery, and the stock went up 100x in 8 months. This was 100x in 8 months. Sold for 1.8 billion. Fathom has a market cap, 26.5 million. So you can see what I mean about like precision in such a wacky sector like this. I think that's, if you're looking for precision or need precision, then it's simply not a no-brainer. I think Fathom is cheap simply because I think it's priced in like there's no chance in hell that they have even one discovery. No chance in hell of one discovery, even though I think there's possibility that they will could have one discovery at Goatshagger, one discovery at Albert Lake, and this is just a small footprint of the overall land packages. This is the Nova anomaly. Their projects are huge. This is the area they've done. I mean, these. Where am I going with this? 1 second. Where are the VTEM? Sorry, guys. Yeah, okay. This one. Here you see the scale bar. This is 300 meters. And if I understand correctly, this is where they have done the TDM service over. This is like what? 900 meters by 900 meters or something. This is how large the Goatshagger project is. This is a 10-kilometer scale bar. And there's confirmed high-grade nickel over here as well. Well, yeah, pretty high-grade. That's like 10 kilometers away. And there are a bunch of targets just near, you know, within 1 square kilometer around this deposit. So how, it's like the possible scenarios that this could end up as Fathom Nickel. It's like anything from nothing at all, everything they see. Well, either they don't hit anything when they drill, or let's say for some reason they get no more money and can't drill anything and, you know, go bankrupt or whatever, like, which I don't find likely. Those are the cases I like. That's how I make money in this sector. I'm not looking for precision. Personally, I think, again, if you need, you know, precise data, you know, I don't really see where that leads to a lot of opportunities, if you know what I mean, because there's nothing at all precise about Fathom Nickel. The only thing I know is that, again, it's priced like this. They have all this, and it simply could be worth a lot. And my bet is, or why I think it's a good risk reward, is that I don't agree with the market that this is, you know, they have no chance in hell of making any discoveries or ending up with a success. And like always, it's like, let's say it goes bad for Fathom Nickel. People will always say, oh, you know, another dog, whatever. It's like they totally miss the point. I mean, that's like most people, bashers, whatever, on Twitter and forums. You ever wonder why they want to sound so smart and, you know, throw shit at everyone else and pointing out how everyone else is so stupid? I mean, that's almost the main occupation for some people on Twitter. Have you ever seen them shut anyone up by posting their long-term results or anything like that? Most of them don't even really post anything about why they're bullish on a stock, or which stocks they're bullish on. Why? Because that opens up them for criticism. Because they are probably not that good at stock picking. They might know how to kind of value a deposit or whatever. It's like, yeah, I think this is worth that, yada yada. But I've seen some, you know, I've seen people that know more about mining than me say that, hey, this stock is worth, you know, 200 million. And today it's literally trading at sub 1 million market cap. Which kind of tells you that there's so much more stuff going on than just, you know, putting together a spreadsheet what you think something is going to be worth. Because you also have the sentiment swing. There's nothing precise about this. This sector, I mean, the whole reason why you can make a lot of money in this sector is because it is so irrational, because it's not precise. Like personally, I think this friggin' ridiculous that Magna Mining is at 98.5 million, and if people say it's like, yeah, well, you know, prospects for nickel are kind of bad, everybody's waiting for a recession, etc. Still, recessions don't last forever. Recessions are, I mean, they last, typically they're shorter than the bear markets in the mining space. So, and that's why people often say, like, yeah, you know, I'm long-term bullish, but in the short term, whatever. It's like, from a long-term perspective, I think this is dirt cheap. That's where the opportunity is. Not that I need to get the precise movement in the short term or anything like that. Right. Yeah, so I mean, okay, so why do I have like Fathom Nickel in a you know, the HODL portfolio? I also have it in the HODL portfolio, but why I have it in the Gambler portfolio, which was supposed to be an example of like, okay, high risk, high reward gambler portfolio. There's nothing precise about any of these. It's like, yeah, I mean, what's the closest one to? Okay, that's not here. But take like Trigon Metals, for example, who are, you know, developing a copper mine. Yeah, on paper, people can say it's worth this and that. I mean, they have an idea of what it's worth. But it's like, will they get to that stage? What could happen? What happens if copper goes down? What happens if copper goes up? What happens if yada yada yada? There's so much more than the stuff you can put down in a spreadsheet. Because otherwise, every single mining engineer would be a millionaire just from junior mining stocks. And it's like the producers. Let's say, you know, you have a producer. It's like, it's printing cash flow. In that case, everybody can read a spreadsheet or a balance sheet. So where's the edge going to be? There's nothing really undiscovered there. And if we're talking like, again, exploration stories like Fathom or whatever, it's like, this is so early that's like, how on earth could I do a precise calculation on? I don't even know what they will end up having. One can make like, you know, guesstimates like, hey, if they have 15 million tons at, you know, 1.52% nickel, that's probably worth, you know, hundreds of millions if you know, not $1 billion or whatever. Those are as precise as I typically am. I mean, it was the same for Novo. What was the bet? That if they unlock and can make either the conglomerates work or the Egina lag gravels work, I think it's going to be really cheap. Because I think that the Egina gravels should be cheap to mine. And that's what, you know, quite a few alluvial miners said that I talked to. And they would know. But I didn't have an typically exact, I mean, it was not precision why I was bullish on the conglomerates and lag gravels. It was simply that, hey, if this works, regardless of what exactly the, you know, margins will be, you know, it's probably going to be worth a lot. And that has not been a success story. And that's the thing. It's like, if I had 20 Fathom nickel stories, I mean, given, you know, how nickel sulfide, you know, deposits work, that they show up in clusters and can form districts, etc. Same with VMS deposits. Like, how many of those 20 would I need to work out? Not many. So I don't know if I'm answering this in a way that's understandable, but I guess the main points would be that, again, I don't like precision. I don't need to, I don't like needing to be precise. It's like, take Elora for example. Or Well, I guess I would say it's like I want the fundamental trend to be up or possibly up, and possibly up a lot or probably up quite a bit, etc. I mean, depending if, I mean, probable growth is better than potential growth and all of that. But still, it's like Eloro. Take that just from a, when you factor in the sentiment and you know, news flow, etc. Do I need to know exactly what Eloro is worth right now? No, we have a maiden resource, and Quinton just explained why the drill results were better than, you know, well, given the drill results, people were surprised, including me, how low grade the global resource was. And he explained why that is the case and why it's probably going to get better. So do I need to be precise about Eloro? It's like, well, I think their high grade is going to grow. I think, I mean, the system is wide open in every direction. So if they drill more, it's going to grow because there's almost no chance that every single, I mean, that the mineralization stops 1 centimeter from where they, you know, drilled all their holes, you know, the edges. No, so I mean, you can make some pretty simple assumptions. That's like, yeah, it's probably going to get higher grade, more tons with higher grade. It could probably grow quite a bit if they drilled more, and then there's exploration upside, yada yada. But you see a lot of people at, you know, on Twitter, for example, they look at the current resource and then they just say, you know, it's worthless. So even let's say that they are right, that nobody's gonna build Iska as a mine based on the current MRE, the current maiden resource. Let's say they are precisely right about that. Thing is that things change. In next 12 to 24 months, maybe there will be, I don't know, you know, maybe they will have drilled up 250, 300 million tons of higher grade stuff. Maybe metal prices will be a lot higher. So does it really matter in that case if you were precise about the current picture, etc.? No, I want big changes. I want layups. I want big deltas. I want to be part of the sentiment delta. And this has almost nothing to do with fundamentals. No precision here. The same ounce in the ground can at one point trade at like $80 to $100 per ounce, and, you know, down to $10 or $20 per ounce. There's no precision there. So it's like, what is a mine worth? Well, we know exactly what it's worth after it's been closed down. Before that, everything is speculation. Mines have been built that go bankrupt. So a lot of people, obviously, like the financiers, etc., thought that, you know, they could make it. They didn't. Might be because the metal prices went down. So there's, I guess what I'm saying, there's so much uncertainty that I think it's, if you need precision, you should probably stay away. And that's why it's like, aim big, miss big. Take Fathom, take Tectonic, take, I mean, even SK, even though that's, you know, I mean, that's baking in more chance of success than the other ones, for example. But it's like, any of those stocks have the potential for huge change in value. And nobody knows what the exact value could be or will be, or what the chances are. So again, no precision at all. But if you find cases where it's like there's no chance in hell priced in that they will have something, and there's a lot of evidence pointing to the conclusion that there is a chance in hell, that just makes it cheap. So I mean, I think, I don't know how to explain it much better, actually, because as I've said a bunch of times, I think, I mean, junior investing and all that, it's much more of an art than a science. It's like, there's nothing scientific really about the same deposit like Bear Creek Mining. Well, now they're a producer, actually, but it's like, for 10 years, nothing really changed with the actual value of the company, but the prices went like this. So even if you, let's say, correct that, hey, this company is worthless, the deposit is worthless, nobody's going to build that. That did not stop Bear Creek Mining from going up 660% from the 2015 bottom. Here I don't remember how advanced it was, but here it went up 2000%. And here it went up 406%. So I guess my point here is that even if you're precisely right that this is a, at the end of the day, worthless project, that, you know, let's say it's never going to get built, or it's going to get built in 30 years. So if you discount that cash flow, it's worthless today. That doesn't stop the stock market from bidding it up hundreds or thousands of percent, or down 80 to 90%. Basically extreme mispricing. This, going back to no-brainers, this is no-brainer long territory for me, just from sentiment. If I had, I think I would make a lot of money just having, let's say, you know, relatively cashed up, or you know, juniors with some cash but low burn rate that were basically trading sardines. Huge resources, which we know is like, yeah, that's probably going to trade at a few $100 million when sentiment is up here, but it's trading for, I don't know, 40 million today or whatever. Same deposit. So that's the thing. It's like, even if one knew what the mine was worth precisely now, maybe worth less, at this point, at face value, at that time, it is certainly worth something. Before, you know, inflation catches up again or metal prices go down. But yes, I would say it's like in terms of, you know, precision. Yeah, I obviously want to see that, you know, success would be meaningful. That, hey, you know, if it's a, I don't know, a really shitty project, or it's a really bad location where you need a really good project, it's like, hey, you know, you can almost drill up as many ounces as you want, but it's never going to be a mine. But again, that's not, I guess, precision either, because that's just, you know, okay, this is, you know, the risk reward is not worth it because it's going to be so hard to reach the threshold for critical success. And I guess, yeah, it's like, yeah, aim big, miss big. Again, no-brainers. Magna Mining is like, do I need to know exactly what Magna Mining is worth? No, but I can, you know, go on just, let's say, signal values. Like, okay, MOU with Mitsui, and it's my understanding that, you know, even the Magna guys thought that was too cheap for Shakespeare. But let's say, you know, $80 million or whatever. It's like, you know, best guesstimate for the actual accurate value, as close as we can get to some kind of precision for Shakespeare. I think the nickel prices were slightly higher and inflation a bit lower. Okay, but let's say 64 million in that case, the lower range. Enterprise value is 80 million. So Green Hill gets like, what, 16 million Canadian? And it's a lot better than Shakespeare. That doesn't make any sense. And then you have stuff like, hey, okay, who's running Magna Mining? Well, it's Jason Jessup and a bunch of other ex-FNX guys. Who in the world is better at appreciating the value of deposit like Green Hill than those guys? Because they literally made $1 billion success from acquiring projects like this. Would they be so heavily invested? Would they spend so much time on Magna? No, I don't think so. If they thought, you know, it's worthless, it's probably worth this much. No, I don't think so. I think Magna is closer to actually, you know, being worth 600 million than 100 million. But as we've seen, I-80, for example, it's like, fundamentals be damned. This market can have prices go I don't know, ridiculously, they can get ridiculously dislocated. And things change. Maybe I-80 will get worse. Maybe Magna Mining will get worse or better. I'm expecting it just gets better because of the people involved. So that's why management is so important. Do I need to have precision if I see some of the smartest people around involved in a stock? No. Because there might be no better people on earth who know more, who could get as close to precision as for what the potential of a project is or whatever. They wouldn't mess around with things they thought were brain dead cases. That's why it's like, if you just see the Lundins enter a junior stock, like Fireweed Metals, when I talked about Fireweed Metals, it's like, what? The main thing there was like, hey, these are the Lundins. Nobody knows exactly what the potential, or what a project like what Fireweed has up at McMillan Pass and MacTung, etc. Nobody knows exactly what that's going to be worth, because we'll know that when the mines are closed, if they will even be mined, etc. So it's like there is so much uncertainty, but as close as you can get to people appreciating value or potential. I mean, Lundins are probably best in the world, or some of the best in the world. So it's like, hey, my precision in that case is like, well, these are the Lundins, and they're way better, way better at appreciating and having some kind of case that is probably more precise than my case, because they know a lot more. So if they're involved, I'm just, they're leading. I was going to say, I just follow their lead, if you know what I mean. But unfortunately, the Lundins don't mess around with every junior, etc. Even if it's worth it, because it might be, not their cup of tea, not the right metal, not the right whatever. It's like, and they don't mess around obviously too much if it's a small thing. I mean, when they went into Fireweed Metals, I think they put like 20 million in. They're after long, big potential. Big projects with very long-term potential, and they're not traders. So I mean, that's when also find it funny when people say you can't hodl junior mining stocks. Well, that's basically what the Lundins have always done, and it's like Ross Beatty, I think, as well. It's like the Lundins. I remember, I think it was Ian or no, maybe Lucas, like or maybe it was Rick Rule who talked about them. That's like they buy once and sell once. And it might take years for an investment to pay off. It's like Fireweed Metals had a pretty slow start, but now recently it has revalued. And the Lundins haven't traded that. They bet on, they bet on the prospect that, hey, we think Fireweed Metals is going to hit with the drill bit and improve the value. And that's, Pierre Lassonde, I remind myself when he says of his saying that 95% of the value is created via the drill bit. So that's kind of the lead I follow. I don't need precision, and if 95% is created via the drill bit, and I'm going to focus on that, it's almost impossible to have exact precision, because I mean, if take Noah Bollinger for example, that went up 100x in 100x in 8 months. Where is it? Yeah, 100x in 10 months. If I mean, given how absurd the revaluation, and that gets sold for 1.8 billion. If the market was precise, this would never have given shareholders from this level 100 bagger in this period of time. That's obviously an absolute ridiculous. That's 10,000% in 8 months. I mean, the stock should be, I don't know, maybe trading up here, and again, it's like, if the market was precise, etc., you would never have revaluations like this, because it should already be precisely pricing in the $1.8 billion sale in, you know, what was it, like 2 years. That should be priced today, back here already, based on the information. But there's so much uncertainty and unknowns. Here there was no discovery, all of a sudden a discovery, and nobody knows how big it will get, and later on it became big. I want to know, is it possible, and what is priced in? Is it possible that some of these stories can hit it big? And what's priced in? Again, that's like coming back to why I don't like precision. It's like, if well, take Garibaldi for example. Where is it? Here. So at the peak, before a single assay, they had put out a single assay, I think before they had put out a single assay on this nickel exploration story at Nickel Mountain. It reached a market cap of 527 million. Okay, we know Voisey's Bay is like sold for 4.3 billion in like 96. And let's say no real fundamental change, maybe some visuals, etc., but it's like no real, certainly not 3000% change in fundamentals, just based on visuals, because it's like, I don't know how good the visuals must be and how wrong the visuals must have ended up being, or whatever, you know what I mean. So it's absolutely ridiculous that this really happened in the first place, I was gonna say. But it's like, okay, when it was trading at 527 million, then you would obviously need some kind of precision. I mean, for Fathom, for example, if I think, hey, it's like 1% chance of making a significant discovery is priced in, do I need to know if it's 8, 10, 15, 20, or even 6%? I mean, even if it's only 6%, mathematically, even though I don't like 94%, I mean, again, you wouldn't bet, you would have to diversify away that risk, because it's like, you know, you can't compound a loss. But still on paper, that would be like, you know, 6 times undervalued. But I don't need to know if it's precise, because it's impossible to know if it's precisely 6% or 10% or 15%. I kind of just need to know, well, it's probably at least, well, if it's at least more than 1%, you know, it's probably cheap. And based on everything I see, you know, on Fathom Nickel, yeah, I think it's more than 1%. But that's as far away as you can come from precision, thanks to the price being so low. That's why I keep saying, it's like, well, this is cheap, so it's a no-brainer. This is cheap because it's a no-brainer. It's not that I know exactly what the value is for the stock, or what the value will exactly be in 6, 12, 24 months. It's just that it's so cheap right now that it might be pricing in no chance in hell for even my base case to play out, let alone blue sky. And if you have smart people involved or whatever, it's like, you know, their intuition, if they believe that the market was right, they would probably not even get out of bed. That's where I think the opportunities are. And that's why I don't think you need to be a geologist. I certainly don't think you need to be a mining engineer. And that's also why I don't play that game. I'm not into, you know, trying to figure out everything, the exact value on advanced deposit, and then see, it's like, hey, I think there's a 50% upside, you know, price to value upside here. That's not a no-brainer to me, because since I am not an expert mining engineer, I'm probably gonna be off. I'm probably gonna be wrong. I much more prefer to buy stuff that is so cheap that it's like, I could be off by, I don't know how much. It's like, again, if we take Fathom for example, I could argue that, okay, if it's pricing in 1% chance, and even me as a hobby amateur geologist, listening to, you know, people that know more than me, like Mega Copper in the forum, or Quinton Hennis, like, I know they know a lot more than me. And I don't think they would even be bothering with this stock if they think that it was a 1% chance. That's enough. That's a no-brainer to me. And I also, it's like, on that note, it's like, you see a lot of people out there. It's like, you know, somebody is like, oh yeah, you know, he was bullish on, you know, I mean, I don't know how many stocks I own, but I have a lot of sponsors, etc., and even more stocks than sponsors. But let's say I have like, I don't know, 30 holdings or something, and people like, yeah, he was bullish on that stock, you know, some stock or whatever, XYZ, and that's performed badly. It's like, no shit. How stupid do you need to be to think that I can pick 30 winners out of 30? And especially in a bear market. I mean, hey, even if the case is pretty much intact or whatever, it's like, it's probably not been the, you know, cleanest run in the share price over the last 3 years. But like, that's how stupid people are, because they have no, I mean, that's obviously coming from people that have no idea how you even make money. They literally, I mean, some people literally believe that if someone is going to make money in the junior sector, they need to be, you know, almost 100% accurate. So that's kind of how you know that, I mean, most people don't have a clue about how you actually can make money or outperform the index, because they literally believe that, like, they can't even put that together. It's like they have no idea that, oh, you know, in my case, like Snowline, I don't know how many failed cases that paid for. But again, let's say you have 5 stocks or 10 stocks. 8 goes to shit, 2 perform really well, and you end up making money. You're going to hear from people, they're going to point out, like, look at those, oh, he was bullish on those 8 stocks and they all are down, whatever. That's how long, you know, that's the kind of, I was going to say, first tier thinking they do. They have no idea. They don't even understand how, you know, they don't even understand how a high risk, high reward portfolio works. If these companies here have 10% chance each of hitting blue sky, this is absolutely egregiously cheap. Because that means 2 of these could hit blue sky, and that would, I mean, depending on which one it is, but we could be talking, especially if we go into a high sentiment environment, we could be talking 20 to 50 baggers. Again, if blue sky would hit. In that case, 2 out of 20 would be enough. If you held the whole position to then, could pay for the other 18. Do you think anyone would think that, you know, portfolio would have done well? Because they would have 18 stocks, let's say, that in this case I was bullish on, and they would point out, man, that guy's got a lot of dogs. And still you would have ended up making money. I hope it makes sense. That's why it's like I saw someone yesterday. It's like, oh, he was, you know, he was bullish that stock. He must be bad. Again, it's like, are you freaking kidding me? Do you think I have even close to 100% hit rate? No way. No way. In that case, I would already be a billionaire. But that's like, people can't stand looking wrong, and that's why most people give up. They have no idea how to play a high risk, high reward sector. They have no idea what this chart even means or how they should think about this. I see people talking about shorting miners here. That is absurdly dumb, in my opinion. I don't know what you're looking for. I mean, yeah, are there shorts out there? Yeah, probably. But it's like, again, even Bear Creek Mining, you have no idea when this sector suddenly turns around. So you're asking for trouble. That makes absolutely no sense. But that's, you know, typically coming from people who, again, have no idea how to play this sector. And they don't have good long-term results. But they do like to point out when others fail or people are bullish on a story that failed, etc. Look how dumb they are. Look how smart I am. But it's like, Try to get a long-term portfolio graph out of those people. You won't, unless it's like photoshopped or something. So yeah, this was a long rant, as always. But the point is, again, that if you're looking for precise like calculations exactly where it's like, that's not the game I play. That is not the game I play. I don't think that's where the easiest the best opportunities are. I mean, literally, it's like Pierre Lassonde said, the gold sector is the easiest sector in the world because it crashes and rallies and crashes and rallies. Always, forever. He didn't say, well, I find it easy because I know exactly what things are worth. He basically said, he just explained this short. So why on earth would I make it a lot harder and go in and try to, it's like, you know, people, oh, you know, look at, I don't know, Apple or whatever. It's like, what's the opportunity there? It's like, when is Apple gonna double easily? It's like, if I'm right, maybe Apple is 20% undervalued or whatever. Okay, so I have a 20% upside, and that's great and all that. But it's like, in this sector, I mean, the opportunities dwarf. The opportunities in this sector, thanks to sentiment, etc., how that works, I mean, it dwarfs the, you know, large cap stocks like blue chip companies. Absolutely dwarfs it, because this is such a swingy sector. The next big move in miners is going to be up. I don't know when. I don't know which companies might not be alive to see it, but the next move is going to be higher. And the lower it goes from here, the cheaper the stocks are. The next move is just going to be even bigger. It's like, I mean, for example, in Bear Creek's case, if it would have went lower before it rallied, the future returns just go up. That's what Pierre Lassonde means when he said it's the easiest sector in the world. Nothing to do with precision or that, you know, yeah, it's the easiest sector in the world if you're very good at estimating the exact value of a deposit. Because again, the same deposit can go up 600% and down 90%. Same deposit might be worthless, doesn't stop it from going up 600% when the hype is on. And it doesn't stop a good deposit from going down 50-60% if there's a flush. Or see stuff like this. So again, where is the opportunity? Is it to be better than anyone else at exactly getting the precise value of a deposit? No, I think this sector is so absurdly weird and irrational that there should be many opportunities where you don't need precision at all, and that's what makes a no-brainer, and that's why I like this sector so much, and why most people hate it, because again, they expect the market to be rational. It's like, we can all complain, it's like, yeah, Magna is real cheap, sure. First of all, we don't know what actually will happen, but it's like, okay, if I think there's a good chance that Magna will look absurdly cheap one day from this level, that we will look back, it's like, I can't understand how it, you know, traded at 80 million enterprise value, 100 million market cap, can it go down to 80 or even lower? It could theoretically go bankrupt. That doesn't change the fact that I think it's really cheap now. And of course, why people get pissed off is, well, it went down. This is a terrible market. This is a terrible sector. Well, what if Magna is now the best opportunity it has ever been? So let's say it's the best buy it's, you know, been since it listed. Even, you know, let's say it's a much better buy now even than when, you know, it was at a low here, because value has gone up a lot more than price. I mean, price is up only 50% from here, for example. let's say it's the best buy ever. Let's say this is an absolute no-brainer buy, and if you would find 20 of these and you would invest 5% of your money in each, on average it will give you, let's say, 400% over the next 2 years or whatever. You'd make a truck ton of money being able to do that. Find the next one that's, you know, same risk reward as Magna Mining, have 20 of those and just I was gonna say reshuffle when those have revalue and they are not longer cheap. You find the next 20 Magna Minings and the next 20 Magna Minings, etc. I mean, the thing is that the same reason why people complain about this sector is the same, or is the actual the secret how you make money in this sector. Because people get pissed off when things get cheap, go down in price. But if they weren't cheap, if they did not go down in price, it wouldn't be so profitable to buy them. Because the past is history and all there is left. I mean, who cares? People can state the obvious. Yeah, this sector sucks, and it has sucks. Duh! How is that important, except the very fact that, okay, if it's this crap, if it's this cheap, where's the next big move gonna be? People use this and where we are now as evidence that you can't make money in the junior sector. Whereas in reality, as per Pierre Lassonde, this is actually the reason why you can make money in this sector. I mean, it's not rocket science. I mean, I try to make it as simple as possible. So if I'm away for a few weeks, it's like, yeah, unless every single company I own goes up in smoke or whatever, it's like, I'm not worried. I mean, most of those cases, take like Inflection Resources, they're gonna, you know, scheduled to drill for 18 months. They need one discovery, and they're gonna be drilling, I don't know, 24 targets. What's the rush? Yeah, okay, if Inflection on no news goes up to 200 million or whatever, yeah, it's probably a fat sell. But unless that happens, which I don't expect it to happen without any news, then it's like, hey, not much to do. Just wait 18 months, and if they make a discovery or more, it's like, yeah, you know, there'll be champagne. Otherwise it will be ramen. But over that same time period, maybe Fathom Nickel have made a fat discovery, and that, you know, pays for, I don't know, 10 Inflection Resources, or maybe Headwater pays for the other 2. And I mean, again, it's like time. I mean, you need to let the cases play out. It's hard to make money in a day or a week or a month. I mean, again, some of these cases are like at least 6 months. I mean, yeah, so I hope it made sense, and I gotta go soon. Yeah, as always, this is how I view stuff, and unfortunately I can't really, I mean, this is not my cup of tea. I understand where you're coming from, but I can't really yeah, that's not the way that's not where I think the opportunity is in this sector, and that's not my investing or speculating style. Simple as that. As always, remember, I'm biased. Be aware of the, you know, companies that sponsor me, which makes me twice biased. Think for yourselves. Anything else? Yeah, no, I mean, just stay rational. I mean, again, it's like, don't take this sector too seriously. It's like, Jesus Christ, it's a ridiculous sector. It's just absolute. It's a joke of a sector. For better or for worse. It's for better if you know, understand this short and all of that. But yeah, so consider me biased. Do your own due diligence. You know, I don't share your profits or your losses, and don't buy a stock just because I am bullish on it, etc. And it's like I always say, it's like, when a good case to me, I have no idea exactly what will happen with any stock. So a good buy for me is a good risk reward, where the potential profits offsets the risk I'm taking. But a good buy does not mean, I mean, in my opinion, a good buy, I never see a buy as a guaranteed win. I just see, again, a good risk reward, a good bet. But some cases that I think are great, and I would have done the same thing even if they, even if they ended up in failure. If I'm happy, hey, it was a good bet, it didn't work out, okay, happens obviously. Because like, yeah, with some of these companies, given how cheap they are now, it's like you don't need many success cases from these levels, these price levels. I mean, again, Fathom Nickel, 26.5 million. In a hot market, as you saw, Garibaldi ran up to over 500 million. When the market is that hot and you kinda need a Voices Bay to make a good amount of money, that's probably, I mean, in this case for Fathom, sure, this is basic shares outstanding, but it's a 10 bagger to get to 260 million. It's almost a 20 bagger just to get to where Garibaldi was without a single assay result. So that's what I mean. It's like the cheaper this sector gets, the lower your hit rate needs to be. If we were up here in sentiment, in order not to be down in the portfolio the next 3 years, maybe you need, I don't know, 50% hit rate or something. Down here, maybe you need 10% hit rate and be able to actually hold it for, the big payoff. Anyway, thanks for listening. Not investment advice. Take care, guys. Bye.